So last Friday's U.S. non-farm payrolls 1.37 million increases, previously revised slightly lower, and unemployment rate dropping from 10.2 back into the single digits to 8.4%. Its employment to population ratio also rising, clawing back some lost territory since the start of the pandemic. We did get some wage growth in last Thursday's unemployment claims, dropping back below 1 million. The results good enough for U.S. Fed Chairman Powell to label it a good one, and in this case, expectations are for rates to remain low for quite some time. Now, elsewhere, we did get manufacturing and services PMIs above 50 for both U.S. and China, a bit mixed for the Eurozone at its core. And when it comes to U.S.-China tech, in this case, we got the U.S. planning to put China's top chip maker on a trade blacklist. But most notable in terms of financial market movement had to do with tech stocks late last week, dropping. Tesla, by the way, not getting included into the S&P 500. So what about the week ahead? Well, we do have holidays in the U.S. and Canada for today. Tomorrow, we're going to get some GDP data for Japan and the Eurozone, as well as some trade data for the Eurozone's core. We do have Brexit talks set to resume tomorrow for its eighth formal round, ahead of what is expected to be an October 15th deadline for both sides to come towards some sort of trade agreement. And when it comes to API's oil inventories reading, which is usually released Tuesday night, given the holidays today, that and EI is going to be pushed one day forward. So in this case, we're going to get it on Wednesday. Early on, we're going to get Chinese CPI and PPI figures. So far, PPI suffering 6 consecutive declines. And when it comes to volatility amongst the FX majors, expect the Canadian dollar to get most volatile. That's because the Bank of Canada is set to announce its monetary policy. Its key rate expected to remain on hold at 0.25%. Now, Thursday, while we get EI's more encompassing oil inventories estimate, we get US PPI as well as the usual Thursday unemployment claims. The fact of the matter is, it's European Central Bank's monetary policy announcement that is expected to be the key item, not just for Thursday, but for the entire week. Are they going to try and talk down the euro or address what has been recent deflationary pressures? Its preliminary CPI figure last week dropping into negative territory. So for Friday, we get a string of UK data, including GDP and trade, whereas for the US CPI figures, which not as important now given the Fed's recent policy shift regarding inflation, as well as Baker Hughes oil rig count, which, although increased by 1 last week, continues to hug the lows.